It's time for Yahoo Finance's Market Minute. Stocks looking for a third straight day of gains after Fed Governor Chris Waller, who says a serious drop in the job market could prompt more rate cuts to come. Federal spending cuts and economic uncertainty still weighing on IBM's software segment. The company's saying 15 of its government contracts are suspended, leading to about a $100 million loss of its business. The news offsetting better than expected quarterly results, sending those shares lower, down over 6% at the moment. Meantime, consumer goods companies sounding the alarm on slowing demand. Procter & Gamble and Pepsi slashing their outlook, citing a pressured consumer and uncertainty around tariffs. And American Airlines and Southwest continuing the trend of carriers pulling their guidance amid an uncertain macro backdrop. Tariff pressures limiting the company's ability to forecast consumer demand. And that's your Yahoo Finance Market Minute. For more on what's trending, scan the QR code to track the best and worst performing stocks.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, markets have been a little hard to follow. They're up one day and then they're down the next day, seemingly. A portfolio manager going to share 3 things investors can do to manage unpredictability. And budgeting for burnout, a workplace culture strategist will give you some tips and tricks to save up so you're not one bad day away from a crisis. Plus, all week on Wealth, we're bringing you a guide to financial products, everything that you need to know about opening different accounts, CDs, and debit and credit cards. Today, we're focusing in on debit cards, what to know and how to use them wisely. You do not want to miss that. But first, let's begin things as we always do, taking a look at some of the market action 90 minutes into the trading day. And as we were mixed to start off the day, take a look at how the tides have turned just a little bit here. So we are higher across the board, with the rally on Wall Street resuming as investors await progress on global trade deals. Joining me now, we've got a good friend of the show, Matt Powers, Powers Advisory Group managing partner here. And Matt, you're expecting continued volatility in the short term. What tips do you have to help investors manage some of that unpredictability?
Hey, Brad, how are you? Good morning. So, market volatility, it's not going away. We know it's here to stay for the foreseeable future, but we just have to get used to it. The volatility, the levels right now, they rival 2008 and 2020. And one headline clearly pushes the market. We just had it the other day, but completely unpredictable. So uncertainty right now appears to be maybe the only certainty that we have. And the S&P 500 forecast, they range wildly. You're looking at 4,000 to 6,000. And we just think forecasts right now, they're just not relevant. It all hinges on Trump's stance on tariffs. And we've had three swings of over 5% in April alone. And the VIX is at 52, which is the highest point since March of 2020. So no surprise here. And that's, one interesting thing is 9 out of the 11 sectors have actually outperformed the S&P 500 year to date. But that's primarily due to the decline in the share leadership at the top.
And so as we're thinking about areas that investors might be looking to hide money right now in the midst of volatility, where are some of those zones that you're finding right now?
Yeah, it's we can say this, it's contrarian, maybe unpopular, but we're always looking at entry points. Like, entry points is key for us. So we don't blanket love these sectors, but discretionary and industrials, there's specific names in there that look like they're at attractive values. And, it's you could say you're already positioning defensively by buying inexpensive companies that have been beaten down from tariffs. But a lot of the risk has been taken out of the price on these. So here's where we're looking. So we look for companies that have strong, steady dividend growth, strong fundamentals, attractive relative valuations, and reasonable payouts of cash flow. So surprisingly, Dick's Sporting Goods, we like them. The shares are off 21% year to date. Very attractive valuation, obviously. Prices come down. But their dividend, they've grown it over the past 3 years, 42%, and over the past 2 years, 24%. So if you're a dividend growth investor, a decade ago, you're getting 55 cents a share, and now you're getting $4.40. So their recent earnings, they beat on earnings, but they lowered their guidance, just maintaining that cautiously optimistic stance. We know they're exposed. They're retail for a lot of apparel companies that source overseas, but I'll tell you, I've got an 11-year-old that plays all sports, And if you've ever been to one of the House of Sports mega stores, they're like 150,000 square feet, rock walls, golf simulators, batting cages. It's like a dream if you like sports. So kids will continue to play. There will be sports leagues regardless. And these items typically are something you buy in store. So, it's we think that when tariffs settle in, which they will eventually, there will be a light at the end of the tunnel. There'll be a company like Dick's that benefits.
It sounds like I've got my new weekend activity where I can just post up for
Good.
a little bit. I hope they don't mind if I'm there for a few hours. Matt, as you think about some of what we've heard in earnings calls and from CEOs over the course of this earnings season, a few of them have come out, and it's actually more than a few, several of them have come out and essentially tried to guide through some of the uncertainty, but have had difficult really conveying to the street that they're comfortable reaffirming forecasts that they put forward at the start of the year. How should investors be evaluating when they hear comments like that from some of the top brass at companies who are trying to best model for what their business will need to do in order to outlast some of the interim uncertainty?
Yeah, you know what? You said it. It's difficult. It's uncertain times, and clearly Trump's stance is unpredictable. That's driving everything. So we're just really saying don't react. Expect continued volatility in the short term, but as an investor, when we're talking to clients, you've got to stay nimble. You reassess where your risk tolerance is right now, because a lot of people are starting to realize that, and just don't chase these rallies without true confirmation. This is very difficult to do, maybe now more than ever. But as an investor, you have to tune out the noise, and you have to maintain a certain level of we say realistic optimism, not blind optimism, but just be realistic and take into account whether you're an investor or you're a trader. Entry points exist for investors regardless. And like I said, there will be light at the end of the tunnel with regard to tariffs, but just no one knows when or how.
Matt, great to see you as always. Thanks so much for taking the time here with us.
Absolutely. See you, Brad.
Now time for some of today's trending tickers. We're watching Comcast and Hasbro. Joining me now, we've got Yahoo Finance senior reporter Alexandra Canal. Ali, first up, we got to talk a little Comcast here. You were listening into this call. The company's shares right now, we're seeing them falling after reporting more broadband and TV customer losses than analysts expected in the first quarter. The Comcast company clocked losses of 199,000 customers. Analysts, they expected a loss of just over 144,000. What more color, I wonder, did you hear from the call?
Yeah, look, the broadband losses, that's been a consistent headwind for this company, main driver why the stock is down today. Now, on the call, they did say that they're launching several strategic plans to try and offset some of this. Now, a lot of the downtick in these subscriber numbers has to do with the intense competition that's out there. These competitors like AT&T, T-Mobile, bundling mobile plans with high-speed internet. Comcast is introducing new pricing models. They're also introducing a 5-year price lock for Xfinity internet customers. They're hoping that enhances value. They're hoping that reduces churn, but they did say on the call that it likely is going to take a few quarters for that to really take effect. Now, outside of the broadband struggles, the company is very focused on its theme park business. They have Epic Universe opening up next month in Orlando. They're also expanding its theme parks internationally to a new area right outside of London. And then on the streaming side, Peacock also showed some improvements. They added 5 million subscribers in the quarter. That brings their total sub count to 41 million. They also were able to narrow losses to 250 million compared to 639 million in the prior year. So still losing money, but better and better each quarter. They just signed deals with the NBA. They're looking to bring more entertainment on board. So that's all the positives. Now, when it comes to the future with all the tariff uncertainty, the macro uncertainty, we know for companies like Comcast, advertising is most exposed. They said they are well positioned right now. They're not seeing any major impacts right now, but that could change the longer this uncertainty progresses. So advertising is something to watch. Year over year, we did see ad revenue decline by 7%, but they said that was due to the tough comps with sports, political ad spend. Taking that out, flat year over year.
And you mentioned the T word, tariffs. Let's get to another company that's certainly going to have something to say about that, and that is Hasbro, surging After a big beat in first quarter revenue and profits, adjusted earnings per share came in at $1.04 versus the 65 cents that analysts had expected. The toy maker also said that it's not changing its full year guidance given the uncertainty of the tariff environment. The CFO saying that the strength of its Wizards brand, licensing and asset-light model are offsetting tariff pressures for right now. Shares rejoicing on that as investors are sending shares higher by about 14.9%.
Yeah, the big beat here, the digital gaming side of the business. And we have seen their physical toy products. It's really lagged over the past 3 years. So this has been a big strategic shift for this company. Revenue for Wizards of the Coast and digital gaming segment that surged 46%. They credited games like Dungeons and Dragons and Monopoly Go. And what stands out to me when you look at the future of media entertainment is that games seem to be where it's at. I was just at a panel last night with a few private equity investors, and Sarnoff, who used to run Warner Brothers, was there as well. And there was this clear read-through that when you look into the future, gaming is paramount, and AI is a big part of that. You're going to have a lot of user-generated content now. People are going to be able to create these games very, very easily, and then you have the fandom around it. So the fact that Hasbro has this to offset some of that tariff impact is huge for this company. Now, executives did warn that the longer tariffs progress, if there's more uncertainty, that could potentially lead to some job losses as they try to absorb as much cost as they can here. But they are trying to outsource to other areas, not be totally reliant on China, which we've heard from other companies. But if the tariff levels, if they stick to where they are today, it could register a hit to full year profits up to $300 million. But they're hoping that some of the strategies that they have to mitigate that impact could reduce that hit.
All right, maybe more entertainment content, media content on that side could boost them too.
Exactly. And if you think of some other companies out there, like the New York Times, for example, what have they been doing? They've been leaning in on games as well. So digital gaming for a lot of these physical companies, something to watch out for.
Yeah, you know, I just don't expect puzzle games or the New York Times crossword to have a feature film in a big screen. So I don't know.
That's true. And really, that's a great point. It's all about the IP, right? I mean, you see some of these shows that are popular, like The Last of Us today, all stems from these games. Minecraft movie coming out. So the IP is a big driver.
Yeah, and that's no knock to the New York Times and the crossword.
Are you a subscriber for the games?
I am not a subscriber for the games.
I'm not either, but apparently we're missing out.
Yeah, well, I suck at crosswords. So.
I do too.
Thanks so much, Allie. Appreciate it. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Coming up on the other side of this short break, the state of the housing market. We discuss new existing home sales data that's fresh out and why home builders are sounding the alarm on tariffs that could potentially weigh on their businesses. Stay tuned. Existing home sales in the U.S. fell nearly 6% in March from the month prior. That pullback comes as new home sales rose more than 7% during the same period. To help us break down what these market trends mean for builders, buyers, and investors, we're joined now by Katie Hubard, Executive Vice President of Capital Markets at Walton, a firm specializing in land acquisition and development across North America. Great to have you back on with us. Just take us into your analysis of what we're seeing in the housing market right now.
Yeah, hi, Brad. Thanks for having me. So existing home sales data just came out, down 5.9%, and the prices were up 2.7%. So what we're seeing is that you still have a lock-in effect with 80% of people who have mortgages still have a sub 6% mortgage. So it's keeping people from moving with the average 30-year fixed rate today at 6.84%. And then on the flip side, new home sales were up over 7% month over month and 6% year over year. However, that came at a cost. The price of new homes came down 7.5% year over year. So builders are having to offer incentives to keep the volume going. And what's interesting is that with the new home prices coming down and existing home prices going up, they're now both, the median price is $403,000 for a new or an existing home. And historically, that range has been 15 to 20%. So I would say that means it's a really good time to buy a new home because the prices have come down.
What does that tell you about who is buying right now, especially considering the amount of first-time home buyers that were really kind of just waiting for some of the affordability challenges to either be offset by new home builders or for the existing home market for there to be a little bit more of a wave of perhaps affordability to come forward?
Yeah, so on existing homes, 31% of existing home buyers were first-time home purchasers versus on new homes, 38% were first-time home purchasers. And what we can extrapolate from that is that more new first-time home buyers are going to new homes because home builders will buy down that mortgage rate. So you can go and get a 5.5% fixed rate mortgage from a new home community, and that's causing more first-time home buyers to go that direction. And then on existing homes, over 30% of existing home purchasers are actually cash buyers. And so that's people that are really unlocking the equity that they've seen grow over the past 5 years in their homes, a lot of homes doubling. And so they're unlocking equity, maybe retiring and paying cash for a house, versus new home communities, less than 12% of new homes are with cash buyers. So they're really geared more towards that entry-level affordable house.
Yeah, some really good insights there. You know, one other area, of course, and it is a massive area to consider, is just the impact of tariffs. And as we're considering what home builders are navigating through right now on the supply side, and then additionally how that's getting passed through to potential buyers, how are we seeing that all kind of play out in the mindset, especially as we're early, well, you know, in the spring home buying season right now, and then what that could hold for the rest of 2025?
Yeah, so 60% of our clients, so Walton, we feed land to public home builders. So our clients are the public home builders. 60% of them are reporting that their suppliers are either have already increased prices or have announced price increases of about 6% across the board for home materials. That translates to about $10,900 increase in the cost per home. However, with the sensitivity of the first-time home buyers in the new home communities, home builders are not yet passing that on to the retail consumer. Like I said, home prices in the new homes are actually down 7.5%. For every $1,000 increase in price for a new home, that pulls 116,000 people off the buying ability. So that's why they're very sensitive to not increasing the prices. They are going to eat into their margins. And we're seeing gross margins from builders go from 24% last year, this time down to around 22%. So they're absorbing that increase at the current time to keep the volume going.
Katie, just lastly, while we have you here, it seemed like coming into the start of this year within the housing and more broadly within the real estate landscape, but specifically, I think it would have been addressing housing, is just the amount of lands that were kind of at least looked across to be deregulated, have some of the red tape come down around them in order for more building of new homes to take place or residential properties to take place. Does it seem like that's going to be prioritized, and should it be at this juncture?
Yeah, so we haven't seen that actually take place yet. It should be prioritized, absolutely, because there's the demand. We're short 2 to 4 million homes per year. The demand is there. We just need affordability to catch up with the demand. And in order to help with the affordability, really the Trump administration could help with deregulation. Now, most of the regulation is done at the local level, but we can have, tax incentives and incentives that would help the local jurisdictions deregulate, because about 30% of the home cost is actually attributable to red tape, not the actual, cost of building.
Katie, great to have you back on with us. Thanks so much for the time and insights.
Thanks, Brad.
Well, new home sales ticked higher in March as home buyers jumped on higher inventory levels to start the spring selling season. But home buyers are sounding the alarm that tariffs could potentially weigh on their business. Yahoo Finance's own Danny Romero is here with more. Danny, what are these home builders saying?
So a few home builders, like we said, are sounding the alarm. They're warning about the impacts on tariffs. So for example, Pulte Group's CEO Ryan Marshall told analysts and investors on Tuesday after their first quarter earnings that he estimates that tariffs will impact their home prices by about $5,000. And he also estimated a 1% increase in construction costs in the back half of the year. So these added expenses are expected to come from a range of materials materials, so including plumbing fixtures, water heaters, porcelain, HVAC parts from China, tiling, flooring, which is subject to a global 10% tariff. And so electrical components like circuit breakers and load centers are also going to be impacted. So executives at Taylor Morrison also echoed the same concerns this week. The builder is forecasting housing inflation for the year to be in the low single digits due to tariffs on metals like aluminum. The U.S. has imposed 25% tariffs on foreign imports of steel and aluminum. So these tariffs could affect prices for items such as HVAC systems, fireplace boxes, post-tension cables, and these cost pressures are expected to show up in the fourth quarter as they affect their upcoming housing starts.
So we got some new data out from Realtor.com this morning where they are seeing the highest housing affordability in some specific areas. Which areas and which regions?
Only 18 states offer affordable housing for medium earners, mostly in the Midwest and the South, and that's because of the construction boom. We saw that in Texas and Florida, even in California, North Carolina, Georgia, Arizona, and also South Carolina. So the dynamics really differ on the coast where land is very limited and people are paying a higher price for a home. So it was very interesting. I mean, you have to see the supply and demand dynamics and how that, implicates everything. But if you are building more, then you have more to offer. And when you have less to offer, then those prices go up. Right. So
I'm going to load up that map after we finish this conversation to take a look at that grade per state here. Thanks so much for breaking this down, Denny.
No problem.
Coming up, everyone, 2 great reasons to save a little more from each paycheck. We're taking a look at the biggest travel trends for summer vacation and how a financial cushion can help with workplace burnout. That's next on Wealth. Let's get you a check of the markets. We are nearly 2 hours into today's trading activity, and you've got a lot of green here on the NASDAQ 100. Just before I get back to that, let's go back to the major averages and begin where we were kind of evaluating some of this move higher to begin this hour as well here. And there you're taking a look at the NASDAQ composite, which gives us a sense of what is transpiring within the broader kind of technology landscape here as the tech-heavy average is moving higher by about 1.8%. You're seeing the Dow Jones Industrial Average up by about 0.6%. That started off the day in negative territory. We have seen things move just a little bit higher, some positivity from Fed speaker. We've had a lot of Fed speak over the course of this week. And so some of the possibility around us potentially seeing a pull forward in rate cuts, that is specifically what the markets right now are trying to digest and wrap their minds around. NASDAQ composite, we mentioned, that's up by about 1.8%. S&P 500 up by about 1.3%. Getting back to the NASDAQ 100 and some of the heat map opportunities that we are seeing, or the trades that we're seeing transpire over the course of the day. As we mentioned, largely in positive territory. Interesting. You've got MailChimp actually leading the pack here on the day. Let me go ahead and try and click on that, see if the chart loads up for me. It's not. So let's go ahead and keep it moving here with ON and Atlassian also moving things higher, pulling up the caboose on the NASDAQ 100. You've got Dollar Tree, Comcast, and PepsiCo. And then just lastly here, taking a look at some of that sector activity for you here. Largely in the green. Technology leading the pack. Staples bringing up the caboose. Switching gears. American Airlines joining Delta Airlines and Southwest Airlines in withdrawing full-year guidance amid heightened economic uncertainty. American's domestic travel demand under pressure in the first quarter, while Southwest announced it will reduce its capacity in the second half of the year, pointing to that softer domestic demand. Here with more on travel demand, we've got Scott Keyes, who is the founder and chief flight expert at Going, formerly known as Scott's Cheap Flights. Great to have you here with us. So, just take us into your analysis of what we've heard from the airlines and what that spells for the summer travel season now that we're past most of everybody's spring break travels.
Sure. Look, airlines, like much of the rest of the economy right now, are flying blind. And when you're a pilot, when you're an airline, you do not want to be in that position. You've seen so many different airlines pulling their guidance, not just the ones you mentioned, also Alaska Airlines as well, and United coming out with 2 different forms of guidance depending on what type of macroeconomic environment we find ourselves in. So they're in a difficult position right now because while the bottom hasn't fallen out in travel today, What they're worried about is, will it really start to soften in the upcoming months, especially in those summer months that are such a cash cow for the airlines, that are essentially the airlines' Black Friday. So there's fears in the travel industry of what this period of economic anxiety and uncertainty could mean for the discretionary spending category of travel.
And so with that, how are we anticipating that consumers will either pull back on some of that spending, and ultimately what type of destinations might receive the most demand as consumers are also trying to figure out, okay, where can we continue to spend into that travel experience versus where should we moderate or trade down some of that travel experience?
I think you're going to see a lot more trading down this time versus previous recessions, but it might look different than previous recessions. So think back to 07, 08. Some of the big winners in that ones were the budget airlines. Think Spirit, Frontier, that have all had years-long expansions at that point and continued to. But nowadays, it's the budget airlines that are in real trouble, and it's the full-service airlines like Delta and United that come in from a position of strength. So while they might be seeing fewer of their business class and premium seats being sold, I think you're going to see a lot of those folks, like you said, trading down to economy or economy plus on the full service airlines. And in fact, it's the budget airlines that have seen the biggest hit over the past month. Frontier Airlines stock down nearly 50% in the past month, just a remarkable drop. And I think that speaks to a different landscape than we've seen historically. But in terms of destinations, look, you see such a talking point of the drop in foreign arrivals to the United States, whether because of tight finances or because of folks getting detained at the border or just nationalist sentiment with the trade war. And that means many fewer empty seats on flights to and from Europe, to and from Canada, which what do airlines do when they have those empty seats? They cut the price. We've seen record lows on flights, like for instance, right now in the summer, Atlanta to Vancouver for $129 round trip. That's something that would usually cost over $500. Flights from Minneapolis over to Iceland for $460 nonstop round trip. Dallas to Amsterdam under $600 nonstop round trip in the summertime. Those are deals that really kind of underscore a softening in travel that the airlines are seeing.
And so all of these in mind, I want to get to some of the tips here for flyers, passengers, travelers who are still trying to get the best bang for their buck for their summer travel season.
Couple things that you can do. First, target the beginning and the end of summer as the cheapest dates to fly. So first 2 weeks of June, but especially the last 2 weeks of August, that's when you're most likely to see great deals popping up and when you can see prices 30-40% lower than that middle of summer period. Second, getting the timing of your booking right is so important to getting a cheap flight. Right now is when we're at the end of what I would call the typical Goldilocks window period for when you're most likely to see cheap summer flights. This is not a typical year. I think we're much more likely to see last minute fare drops than we have in years prior, given the kind of economic landscape that we find ourselves in. And then finally, if you are sitting on a stash of frequent flyer miles, expect to be able to use those for great value this summer. Not only are they usually at their best value for those last minute flights, but again, with many more unsold seats coming into this summer, those are the seats that airlines typically release to award availability in the final weeks before a flight. If you can hold out, you're really good odds this year of being able to get great value for those miles.
Scott, I only got about 30 seconds left here. On the international travel front, how should travelers prepare for the reality of exchange rates with the weakening dollar as of right now?
Yeah, look, the dollar's going, it's down anywhere from 5 to 15% over the past few weeks. Still a lot higher than it was, even a decade ago. For folks who are traveling to Europe or Japan, expect things to be cheaper than you were there last time, even if it's a bit more expensive than it was a month or two ago.
Scott, great to have this conversation. Thanks so much for joining us and bringing us some very valuable tips for our summer travel plans. Appreciate it.
My pleasure. Thanks, Brad.
The 2025 Mercer Trends report found that over 80% of workers are at risk of becoming burned out, and that for younger people, financial stress is a major contributor. with majorities of both millennials and Gen Z living paycheck to paycheck. So how can younger workers build a lasting financial cushion? Joining me now, we've got Jennifer Moss, workplace culture strategist and author of Unlocking Happiness at Work. Jennifer, great to have you here with us. What are some of the consequences of higher burnout that you've measured?
It's really interesting that we've seen this increase in burnout. Even the Mercer Trends report, the new data just came out, and we're even seeing an increase again this year. Peak pandemic, and we didn't even see these levels of burnout. So, mental health is a real concern. And if we're not prepared for being able to take that time off, it could have, a real impact on our well-being.
So you have something that you call practicing burnout budgeting. What exactly is that, and how can workers practice it?
I think back before burnout was such a ubiquitous word and everyone was talking about it, we did have this sort of a concept of saving for a rainy day. And I know I grew up with my dad always saying, make sure that you have that ability to quit your job if it's not something that you want to be doing anymore. And now we're seeing it from a burnout standpoint that there's such an increase. We have seen the highest level of mental health disability leaves since the pandemic than we saw for decades before in history. So we want to be able to have that money, that just in case money, but it allocated just in case we need to take that time off for mental health, for burnout, for chronic stress, which, like I said, it's just exploding since the pandemic.
Do you recommend saving a certain amount, a threshold, percentage basis, or putting it into a specific type of account?
We should have it in a protected savings account. One of the best ways to think about this is how long it takes to recover from a burnout episode. It's typically, if we are actually hitting the wall, we are looking at 2 to 3 months of recovery, which might seem like a lot of expense to save up. That's really, 3 months worth of paychecks that we want to have saved up. So it's really just about starting with 1 week and then another week. But if we can get to a place where we have protected savings for 3 months, then we're in a really good spot. And if we are in a situation where it's really toxic, that gives us that freedom that allows us to make those choices if we need to.
Sometimes I'm not sure if it's burnout or my spring allergies, but in any case here, if you are trying to figure out whether or not you should take a micro retirement, as has seemingly started to become a little bit more popular among younger generations, Gen Z, millennials, who have retirement crisis stress, but then also are just trying to navigate some of the current uncertainty. What are some of the effective ways to, if you need to, take a little mid-career micro-retirement and plan for that and save for it effectively?
Yeah, I'm seeing that a lot. And I think one of the things with Gen Zs that we constantly talk about is this idea that work, life balance or well-being is somehow antithetical to work ethic. And I totally disagree with that. One of the ways I have these, 5 really quick and simple tips to think about how to create a burnout budget. One is just focus on enough. So again, it's like a couple weeks of savings still gives us that sense of relief, making sure that we automate that relief. So, making sure that we're kind of having it taken off and it automatically going into a savings account. Make sure we're using our benefits like it's money. There's therapy that might be free. Our EPs can help us with tuition reimbursement and wellness programs and commuting benefits. We also want to make sure that we're auditing our emotional spending. So often when we're really stressed out, we tend to want to eat the ice cream, want to go out and spend a bunch of money on new clothes or online shopping. Make sure you're realizing when that's happening. And then really important is talking about money openly. There's so much shame and stigma around this stress, around living paycheck to paycheck. 1 in 4 young people are putting off family planning right now, which is really significant. So these are the ways that we can create a burnout budget and do it safely, but also give ourselves that space if we're not having a good experience of work, if we're burned out, that we can get that relief because we have budgeted for it.
Jennifer, thanks so much for taking the time. For the sake of my employer as well, I've decided that it is my seasonal allergies and I am not burnt out. Not yet at this point. Thanks so much, Jennifer.
Thanks so much.
Coming up, everyone, we've got your guide to financial products. Today, we break down everything that you need to know about debit cards. That's next on Wealth. This week, we're bringing you everything you need to know about smart banking, and today we're focused on debit cards. Joining me now with some of the best practices, we've got Mindy Neer. She is the principal and wealth manager over at Madeira Wealth Management. Great to have you here with us in studio.
Thanks for having me.
So can you start by breaking down just how debit cards work for those of us who might not be as privy or use them as frequently?
Yeah, so debit cards are payment tools. They link to your checking account. You'll open up a checking account with the bank. Your debit card allows you to access that money in the bank, spending it, making purchases, and making cash withdrawals.
Okay, it's good to know nothing's changed since I set mine up many, many years ago. We won't disclose how many. You shared 3 things to consider, though, when choosing a checking account type: fees, interest rates, and potential cash rewards. First, how can users avoid hidden fees?
It's really important to read the fine print of the checking account. So fine print might outline fees for maintenance, service, for account statements being sent to you. You can avoid those fees by reading about, if I have regular deposits going into the account, they'll waive my fees. If I sign up for electronic delivery of my statements, they'll waive fees. So it's really important to understand what the fine print says. And then also, if you have questions, ask the bank and see how you can avoid those fees, or if there's another checking account that you should be using.
Certainly. And so with that in mind, what about interest rates? How important is an interest rate with a checking account as it may be used?
Yeah, it's hard to get interest rate on checking accounts. So there's actually 2 different types of checking accounts you can do. You can do online checking, you can do the traditional brick and mortar. Online checking accounts tend to have a higher interest rate, so it is important to look at that option. And then with your traditional checking accounts, you might get a higher rate, let's say if you open up a savings account as well attached to it and can maintain a minimum balance.
And so what about cash rewards? Because I feel like I've got this with my debit card, or my checking account. What are the best practices that you can share for racking up those rewards? Because I don't think I'm using them wisely at all right now.
Yeah, it depends what kind of card you get. So there are rewards cards. Actually, this is more common with credit cards.
Okay.
So you'll receive rewards points for using the credit card. More and more we're seeing it with debit cards. You can have 1%, 2% cash back, or based on your spending habits. So maybe the debit card offers cash rewards for certain category spending, restaurants, travel. So take a look at what options you have and choose the one that aligns with your lifestyle. And then a side tip is take that cash rewards and put it into your savings account so you can start building that long-term financial plan.
Debit cards are often linked to someone's main cash reserve. So how do you protect against fraud and scams as well?
Yeah, and in an increasing environment where that becomes more and more important. So number 1, when you get your debit card, sign it. So that's a way to protect your card. You're endorsing the back of it. It verifies your signature. Number 2, watch out where you're accessing your bank account, where you're logging into your account. If you're on public Wi-Fi, do not log into your financial accounts. You want to go on a private, secure network so that you reduce the chances of anyone accessing your information. And then number 3 is utilize your digital wallet. So a lot of your phones now have some sort of pay option. When you use your digital wallet, it's encrypted. So there's less of a chance for access to your actual bank account.
Mindy, thanks so much for joining us in studio.
Of course, thanks for having me.
Well, most people in their wallets, they have a debit card and at least one credit card. So how do you know when you're supposed to use each card? Joining me now on this, we've got our very own Kendall Little. Kendall, help me break this down. What purchases should you be putting on a credit card?
Yeah, so we all want to earn those rewards points and cash back, but even if we look beyond that, there are some benefits to some purchases of using a credit card. One is going to be large purchases. A lot of credit cards have benefits for purchase protection and extended warranties, so that can be really helpful to make sure that you're protected against damage or theft when you buy big purchases like a new computer or an appliance for your home. Another one is going to be travel. Other credit card benefits often include trip cancellation or trip delay insurance and even lost luggage benefits. So when you're booking your hotels and your airfare with a credit card, you can sort of unlock those protections. And then finally is online purchases, and that's going to help protect you against fraud. A lot of credit card issuers have zero liability against fraud and even fraud monitoring, so you can catch if your credit card information is stolen almost instantly. And then because that money isn't taken directly out of your account the way it might be with a debit card, you can sort of resolve the issues faster.
So when do you know to stick with your debit card on the other side of that then?
Well, I always like to tell people to use their credit card like a debit card anyway. So that means only spending what you know you can afford to pay off every single month. But if you do have issues with overspending, or maybe you're focused on paying down existing credit card debt that you have, it can make sense to switch back to a debit card, even if that's only temporarily.
So what if someone's just starting out with credit cards? How should someone that's just beginning transition to using them without overspending? And this probably could have helped me when I was, a young 20-year-old just getting into New York.
Yeah, so a lot of the tips for overspending are going to apply no matter what payment method you're using. But one good thing you can do is sort of step back when you're about to make a big purchase. Take a couple days, take a beat, make sure that that's not an impulse buy that you're going for. You can also, specifically with a credit card, make sure that you're not keeping that card information on a retailer's website. So that just creates another barrier between you and making the purchase if you have to actually enter your card information rather than just clicking purchase. Yeah. And then finally, I'd say, make sure that you do have a budget that you can stick to. So again, using your credit card like a debit card, you don't want to spend any money that is not in your account. That can lead to overspending. But if you have that budget and you know what you can spend, you can sort of avoid those pitfalls.
Kendall, thanks so much for breaking this down.
Yeah.
Everyone, we've got much more on wealth after the break. You're watching Yahoo Finance. It's time now for Tech Support, our weekly segment about all things technology, and gamers have some good news this week as the pre-orders for the Nintendo Switch 2 are officially open in the US. Good luck! Here with more is Yahoo Finance tech editor Dan Halley. Dan, what can gamers expect from the Switch 2?
They can expect a lot. A much improved display. Graphics are finally improved. The original Switch is 7 years old, and it's one of Nintendo's best-selling consoles. Yeah. It's the best-selling home console of all time. It's only behind the Nintendo DS, their old handheld with two screens that popped open, that is their best-selling device ever. And so the Switch is huge. The Switch 2 is, it follows basically the exact same formula: bigger screen, better design, better quality products, and improved graphics. They're launching with the Super Mario Kart World. This is the view of it on a TV. Obviously, it still has that drop-in. It'll now do 4K support. It's going to have the ability to support HDR. The screen on the Switch itself is going to have better resolution. It really is going to be a better overall product. It's expensive, though. The original, I think the original was $299 around there. This is going to launch for $449 with just no games. You can get it for $499 with Mario Kart World. I'm going to throw it out there. I was up at 12:01 this morning, going through the Best Buy website.
Were you successful?
Kept crashing, got on target, boom, got it. So I have it in my cart. I don't want to show anyone my cart details because that's where the order number is, and I got to keep that secret. But I think it's awesome. I'm excited. But obviously, if you try to go to any of these websites right now, it's sold out. And because of the whole tariff situation, right. Game consoles not exempt. Games, physical games, not exempt.
Which is what we were talking about a couple of weeks ago as well. Tariffs potentially having this impact on pre-orders and whether or not people would actually see those orders come through, and the pricing strategy behind it all. And
the Mario Kart World is going to be $80. That's look, it's a big price increase from the usual 60, 65. But to be fair, like Donkey Kong Country and stuff, when that came out, that was like $79, I think, and that was in the late 90s or mid 90s. So that was a lot of money then. So, it's still a lot of cash that they're asking for a game, but there's a lot in it. But the accessories are going to be more expensive. The controllers are more expensive than they originally thought they were. $90 for the pair of Joy-Cons. So the accessories, the camera are going to be more expensive. There's a camera so you can do streaming back and forth with friends and do kind of FaceTime stuff. But overall, I think the tariffs are going to impact people's ability to get their hands on it because Nintendo builds in China, they build in Vietnam. They're trying to build more for the U.S. market in Vietnam, likely. And then in China, obviously anything that comes through, they have the 145%. That would just hammer them. But you can, in Japan, they've been selling them for far cheaper than they would in the U.S.
If I haven't bought a console in 10 years, is this the console for me to get? I got 30 seconds.
I would think the PlayStation 5, just because of all the different interactivity, all your different streaming apps, things like that. Nintendo hasn't gotten into streaming apps as far as announcements on the Switch 2, so we'll have to see. But if you're looking for a game to get into, Nintendo always is top notch. Can't do better than Mario.
Well, rest assured, I won't be streaming because nobody needs to watch me take L's out there as I'm
Fast.
starting to get my sea legs back in the gaming space. Thanks so much, Dan. Appreciate it.
Sure.
Let's do a final check of the markets. Right now, taking a look at the major averages, the Dow, the S&P 500, and the NASDAQ are still in positive territory. The averages started off mixed. We've seen move to the upside and holding on to some of these gains. The NASDAQ up 2% roughly right now. That's it for Wealth, everyone. I'm Brad Smith. Thank you so much for watching. You can stay tuned for Market Domination coming up at 3 p.m. Eastern Time.